everyone. I am CA Megha Saxena, Secretary to Auditing and Assurance Standards Board. Today, on behalf of the board, I welcome all the participants to our seminar Decoding 220, SA 220. SA 220 emphasizes the responsibility of the auditor or to ensure the quality of the engagement at the engagement level. And it also ensures that all the professional standards are complied with and also ensures that the proper direction supervision is done at the engagement level along with the reviews. Today we have with us a CA PK Ranganathanji, who's also a board member and who possesses the experience of around 40 years. I would like to tell you something about his profile. He has worked with the many big companies like Ashok Leyland, and he has the leadership positions also. He was holding the leadership position of the VP and CFO at various level and in various industries. He has received many awards, including the CFO Lifetime Achievement Award and the Financial Leadership Award in 2012. He is currently working as the advisor and the head of the finance of a technology startup called as Coven, which works in the field of the artificial intelligence. He is a member of the board of governor of the Institute of Internal Auditors, and he is also the member of the SOCHAM. And currently, he is also working with the Internal Auditing and Assurance Standards Board along with AASP in ICAI. So now, with this, I would like to request CAPK Ranganathanji to kindly begin the session, please.
Thank you, Megha ji. It's a honor and privilege to be part of this webinar on behalf of ICAI AASB. I will now start the presentation straight. Hope it is visible to all.
Yes, it is visible.
Okay. Good afternoon, and once again, thank you, Megha ji, for the very good introduction. Thank you all for having come to listen to this very important webinar on SA 220, which standard itself is quite significant in the context of auditors today, more particularly from the point of view of how the regulators are approaching the audit quality as a matter of real importance and concern also as far as the CA firms are concerned. Definitely a discussion on SA 220 will take us to a very good level where we may be able to be better off in terms of organizing our firm's ability to meet the prescriptions of the regulators and importantly enhance the credibility of the CA Institute, which has provided us the opportunity to be a practicing chartered accountant. With this, I take you through this presentation. It will take about 50 minutes and balance I am ready to handle any questions that may come from you. Today's presentation is on quality control for an audit of financial statements in the context of SA 220. My presentation will have the objectives and contents as below. We will first understand what is audit quality from a different regulator perspective, namely IFAC. IFAC is a global regulator in terms of the practicing public accountants. It's a body of different countries. All of us know about it. And how does IFAC look at audit quality as a matter of significance and as a matter where every one of the practicing public accountants will need to adhere to the principles of audit quality. And then let us also understand about the background of the auditing standards and why many of the regulators in India are looking at audit standards as a major thrust, more particularly NAFRA, which is the body which has a monitoring and supervising role on the CA Institute. We also will understand ACA 220 and decode it in the context of statutory audit of the companies, understand its objectives and applicability, and also get an explanation of how SA 220 and SQC 1 are related to each other, where exactly we need to fix SQC1 and we need to fix exactly SA 220, and compare also the international standard on auditing 220 compare with SA 220 of our institute, and assess where the real weight lies, which one will give us a better understanding of what are the values associated with audit quality. And we will have also a discussion on the duties and responsibilities of the auditors in the context of quality in audit, how we need to preserve quality, maintain quality, and continue quality, and understand the value addition that comes up from SA 220. First, let us get into the way in which IFAC approaches IFAC and as well as MCA, Ministry of Corporate Affairs, namely the controlling body for the accounting professions in this country. IFAC has made one very significant statement in the context of achieving high quality audits. I would like to read it out. High quality audits of financial statements are essential to strong organizations, financial markets, and economies. While audits have historically focused on enhancing the confidence of investors and other providers of capital, other stakeholders also benefit from the auditor's report, including directors of the company, management members of the company, employees, analysts, regulators, rating agencies, customers, suppliers, and the public at large. Therefore, so many people are looking at the auditor's report and the auditor's notes as a part of a knowledge bearing instrument. And acknowledging this context, high quality audits clearly serve the public interest. So the IFAC's thrust is on public interest, public image, and public discussion. Given this, IFAC has prescribed five major contours or processes to be observed by every public accountant practicing accountant firm. One is about the right process. The right process involves three major approaches. One is approach the audits as a value added process. What exactly the auditor would like to provide to his stakeholders as a value from the audit that he perceives, from the audit that he performs. The value can be of any type. Value can be providing the audit report to the shareholders of the company, providing a type of interim report for the similar type of accounts or occasions, anything like that. But adding a value is very important. Then evolve new assurance services to meet the needs of the stakeholders. Assurance services matlab only connected with the audit and assurance, nothing beyond that. Therefore, to institute the confidence which IFAC has given here in this context, the assurance service needs to be expanded in the context of audit and other services, where new and innovative methods of assurance, innovative practices of assurance can be provided by the auditors, and embrace the role of technology in the current context and current technology boom that is happening everywhere in the world, particularly in the context of artificial intelligence, voice bots, chat bots, and other things like robotic process automation, etc., etc. The infusion of technology in audit has become quite significant and quite important and must to do also. Therefore, the right process gives accent on one, value, two, innovative services, three, technology. The second one is about the right people. Right people matlab, it means ensuring that you have the right talent and the right knowledge bearing team with you in order to deliver the services. One is ensuring the diversity in your hiring practices. Bring more people who have more knowledge of different subjects in the context of audit, in the context of technology. preserve the multidisciplinary business model. Matlab, you ensure that the auditors need to ensure that they have different type of assurance and innovative audit services, so that the clients can approach the auditors innovatively also, and continue to focus on enhancing skills, competency, and adherence. Here the context is very clear. Importance is given on diversity, multidisciplinary business model, and lastly competencies and skills. So the process that involve the under right people involves the three major contexts. Next is governance. Governance matlab the way in which we function as a firm of accountants. Appoint properly skilled independent audit committees. This is for the knowledge of the companies also. The very fact that the audit committees are the torch bearers in terms of the financial information to the outside world, the importance of audit committee cannot be overemphasized. And therefore a very strong knowledgeable audit committee appointed or brought in by the company and also supported by the firm of auditors is also important. Enhance the transparency of communication from the audit committee, the firm of chartered accountants, and the public accountants. Then the right regulation, very important. We have already said what is the context of regulators sometime back. In that context, a very omnipotent and multi-bearing reasons for a well protected regulation in the context of audit, in the context of assurance is important. The sound and updated audit standards offer the most important and first aspect. Second is a prudential approach to regulation, in the sense that what is offered as regulation should also meet the requirements of the practical approach which the auditors may like, which the firm of auditors may like to adopt, and the legal regime also should support the expansion of the assurance offerings. As I said, the new and innovative assurance services is also becoming the call of the firm of accountants, and therefore the legal support in respect of this expansion of assurance offerings should also come along with the innovative practices which the auditors are likely to provide and are providing. Apply evidence based analysis. Evidence is the essence and hallmark of auditing, and therefore always ensure that you provide the right evidence. And then comes right measurement. How do you measure your value? How do you measure your technology embarkation, and how do you measure the credibility and acceptability of the auditors across the zones and across the different regimes with which the auditors are playing. And then next comes what is the role of MCA in the context of a well meaningful audit quality standard or audit quality practice. 143(9) of the Companies Act provides the compliance with reference to auditing standards. It does not make any ambiguity in terms of a auditing standards will be applicable for the practice by the chartered accountants and the firm of accountants. And it also specifies that such auditing standards shall be with reference to the verification by the auditors of the company's financial records, statements, etc., etc. And the application of the auditing standards will have to have an overbearing impact on the totality of all the records and evidences that are placed to the auditors by the company. And lastly, they have to ensure that context of tampering, fraud, misfeasance, anything of the type of fraud should be in the knowledge of the auditors and they cannot overlook it. So this is the compliance and prescription with reference to audit quality in the context by the section 143(9) of the Companies Act while specifying audit standards. Correspondingly, 143(10) of the Companies Act has prescribed in equal force and in measurement that the government, central government, shall appoint a body called National Financial Reporting Authority, which will be the overseeing and oversight body for the for the profession of chartered accountants, and the ICAI will be overseen and oversighted by NAFRA. There is no ambiguity about this also. Therefore, the accent on quality of audit, accent on a supervision on the profession of audit is well set within the ambit of Companies Act. There is no second opinion and ambiguity about it. Let's move to the other part, namely, having said that Section 143, 9 and 10 prescribe certain standards, prescribe certain guidelines about the regulators coming in place. What exactly is happening? Active regulations have now come in force. Not only the NAFRA, there are many other regulators also in force, which we will see shortly. So, in this context, when NAFRA is there, if we remain as normal auditors, is it right? Normal auditors, matlab, just run of the mill type, is it acceptable? If that is the case, what will be the fate of the investors? Are they worried investors? Are they merried investors? Which exactly will be the case? So we need to very clearly analyze what exactly is the context of the regulator and where exactly the firm of chartered accountants and the auditors will have to play their part so that investors are not worried. And last, very important is that the in the context of all the standards on auditing, the institute has prescribed about 46 standards. I just want to draw reference here. Of 46 standards, there is only one standard on quality control, which is SA 220, which we are all aware of. That is to say, while we have nine standards on principles and responsibilities, 11 standards for audit evidence, 6 standards for audit conclusions and reporting, and other assurance and engagements have 5 standards, we have only one standard for quality control. And therefore, we need to keep in mind whatever that is prescribed in SA 220 or irrevocable cannot be breached. That is in full swing. This is the only standard which NAFRA is very much concerned about. Not that other standards are not important. For example, SA 600 came into lot of debate and discussion very recently with NAFRA, between NAFRA and our institute. But SA 220 is very closely analyzed and followed by NAFRA. Having given that, let us just run through the regulators. The overall regulators are like this: IRDA for the insurance companies, Reserve Bank of India for the banking companies, SFIO for all the organizations which get into any of the fraudulent actions in a corporate world, and then we have our own institute, which is the torch-bearing institute in respect of prescription of accounting and auditing standards. We have NAFRA, which oversees the CA Institute as well as other accounting institute, and we have SEBI, which is a financial regulator and also having some impact on the chartered accountants or the firm of chartered accountants in respect of how they need to report, etc. What is the type of report they have to give, the quarterly the quarterly audit and the annual audit, how they need to conduct, what type of report and disclosure they can give, or prescribed in the guidelines and notifications from SEBI. These are all the regulators. Having said that, what is NAFRA doing? NAFRA is, in the last 5 years alone, if you look at it, they are into audit firms and individual audits for their professional conduct and audit quality. Let me not give any negative implication here. NAFRA is looking at professional conduct and audit quality by the firm of accountants and the auditors. If there is a misconduct or a lapse in audit quality, that's a secondary aspect. NAFRA is concerned only about the professional conduct and audit quality by the auditors. Given this, what actions they have taken in the last 5 years up to June 25, 85 chartered accountants have been debarred. This is a fact. 103 professionals, CA professionals, have been imposed varying fines. The fines vary from 50,000 to sometime even 10 lakhs, as much as I have seen. So this is the other action which NAFRA has taken. Conducted inspections and audits of firms identifying deficiencies like related party transaction, independence in policies of independence of auditors, documentation, and fraud risk. These are all the major areas where NAFRA has laid its hands in terms of the audit report and audit findings given by the firm of accountants and the charter and the auditors. That means the second audit done by NAFRA. Actions are aimed at improving the audit quality and accountability in the Indian market. This is the context which NAFRA always says when it takes up an inspection audit. So this is the general role and action by NAFRA. Having understood it, what are the areas of concern that comes to us? As I said earlier, related party transactions, policies on independence, fraud risk evaluation, documentation. These are the four major areas which find place in the NAFRA's reports. What is that? Overlooking the related party transaction, lack of policies on independence by the firm of accountants, overlooking fraud risk evaluation or not concerning with that during the conduct of audit, non-adherence to documentation. Documentation is the bedrock on which the audit needs to be conducted. But if the non-adherence is going to be there, then the bedrock collapses and everything collapses. Then comes what exactly are the let us take two major entities on whom NAFRA has come very hard and strong. One is DHFL, Diwan Housing Finance Limited. ILFS, which we all know, it came into publicity because of the huge amounts involved. Both have huge amounts, but DHFL, almost 50% of the NAFRA orders concern only DHFL. If you take from 20 to 25, 2020 to 2025, most of the orders are on DHFL in different matters. Not only the four which I have highlighted some time back, it is also on other issues. Some of them did not comply with para 14, 15, 16 of the SA 200, overall objectives of the independent auditor and conduct of an audit in accordance with the standards on auditing. This is a major lapse on the part of the auditors of DHFL, failure to comply with standards, etc., etc. So this, as far as DHFL is concerned. ILFS, partners of the firm had direct access to the top management. This is alleged by the NAFRA, and in a way, when the matter went to Supreme Court also, there was a lot of discussion on this point, whether the firm of auditors had lost their independence by virtue of being having a direct access with the top management. That was a question raised even in the courts. So coming to the last aspect, namely misuse of UOM's emphasis of matter for issuing a modified opinion. This was also one of the very key matters discussed both by the court as well as by NAFRA in their reports. Sufferance of audit quality in both cases and lack of trust on auditors made big headlines in the streets. This is very important. Okay, let us go straight to audit quality under SA 220. What I am going to discuss are these seven aspects, namely components of quality control, objectives, analyzing the purpose, applicability, SQC1 comparison, relationship to ISA 220, auditor's responsibility under SA 220. These are the six major components in the context of quality of audit as prescribed in SA 220. Client engagement acceptance. When we accept, there must be a clarity in acceptance and there must be a documentation in acceptance. How is that clarity evolved? How is the documentation coming in place? The institute has given very clear guidelines. What is the type of client engagement letter we need to put in? What is the type of acceptance we need to put in? And how do we need to prescribe our requirement with reference to MRL, Management Representation Letter? These are all part of the client engagement and acceptance in the SA 220. Then engagement partner and team. Every time when a new engagement as a statutory auditor or as any other assurance services is taken up, there must be an engagement audit partner mentioned by the firm of auditors in the engagement letter. No breach about it, no breach on that. And then it must also specify a reasonable understanding about the team that is going to do the audit or going to do the assignment of assurance service. EQCR, Engagement Quality Control Review. This is the most important part of the entire context of SA 220, in the sense that whatever we do must must be confirmed and accepted and agreed to by the EQCR. Every firm of accountants who has taken up an audit of a public listed company or any other type of company must have an engagement quality control review and a reviewer. That reviewer should conduct this review and ensure that all aspects of the audit engagement and final till the ready draft report is available, everything has been adhered to. One important thing is the release of the report by the EQCR should be ahead of the date of audit report. That is to say, the quality of the audit must have been certified before the audit report is placed in the board meeting of the company. So that is a very important step which every one of us will need to bear in mind. The other things like performance monitoring and standard SQC are all very known aspects. In this, SQC forms a very important part because of the fact that SQC1 is a different standard altogether, and we will deal about it a little later. It has got more aspects than quality audit SA 220 alone. So we will see what it is in the context of SA 220. Having said this, what are the objectives, purpose, and applicability? I have said about SA 220, I do not want to repeat again. It is quality control for an audit of financial statements. Simple. Everything is known and everything is understood from the one statement. Next is objectives. I already said in my preliminary observations to implement quality control procedures in the conduct of audit, ensure that the auditor complies with all the professional standards, both regulatory, legal, and even the firm's own independent policies with regard to assurance and audit. That is very important. They have to ensure to have a standard or a policy on independence and audit engagement, and that firm or auditor should comply to that engagement and independence policy of that firm. That is very important. And then issues report which are appropriate, quality control at engagement, from engagement level to the time when the report is released, audit report is released. Purpose, I already said, reinforce the confidence of the public in the audit and in the stakeholder for whom we are doing the audit. Applicability, all financial statements, responsibilities of the engagement partner, responsibility of the firm to support the quality of audit, mandatory for all the audit firms and all auditors. So these are the context of objectives, applicability, and purpose. Engagement, what is that? We have said engagement partner, engagement partner. What is that he has to do? He has to take the overall responsibility. He is a leader. He is the person who is giving the direction, wisdom, knowledge, and everything else to the team who is doing the audit. For the team doing the audit, engagement partner is the benefactor, and he must be an independent person away from the stakeholder for whom the audit or the assurance service is being done. He must directly and exactly on the team that is appointed for the purpose of this engagement supervise and review the work. What is the periodicity and supervision? it is left to the firm's policies and engagement guidance. Consult on difficult or contentious matters. This consultation can be with the management of the company itself in order to understand more about the business and other financial information, or in case it becomes difficult for the engagement partner to arrive at a conclusion, he must have a subject matter expert and discuss with the subject matter expert also. Lastly, engage yourself, that is engage the engagement partner must engage himself with the EQCR. The reviewer should be always in constant touch with the by the engagement partner. Because of the fact, engagement partner should keep the reviewer often and at periodical time informed of how the audit is going on, how the documentation have been done. This is a requirement under EQCR. Then SQC1 and what are the components in the context of SAC 20. SQC1 focuses firm-wide quality control systems. It applies to everything around that audit firm, professional accountant firm. And it is just not limited only to the engagement partner or that particular engagement. That means it has an overall impact and overall coverage of the audit firm which does the audit, and applicable to all services, not only to that engagement but also to other review and other assurance services or assurance engagements. So these two critical differences between SQC1 and SA 220 must be burned by every firm of accountants and the auditors. So what does SQC1 provide as a guidance to the SA 220 practicing firms and accountants? It provides five major guidances. One is leadership responsibility, how the engagement partner must lead the team in respect of conducting and engaging and supervising the audit. Then what are the relevant ethical requirements, not only by the firm and not only by the engagement partner, but also by the members of the audit team? This is also important. Then acceptance and continuous of client relationship and audit engagements. What is the form, what is the manner, and what is the time, and what is the documentation that is to be ensured by every engagement partner while they accept the client relationships, client engagements. We have already seen about it. Our institute has given very clear and unambiguous guidelines and guidance notes in regard to this. Then engagement performance. Performance does not mean the outcome alone. The means to the performance, means to the outcome is also equally important in this context of engagement performance. How do you conduct the audit? What are the means you are adopting? What are the tools you are adopting? These also form part of the ethical requirements. And therefore, the engagement performance starts from the time you are conduct the audit till the time the audit is completed, bringing the required outcome. Okay, and then monitoring. Of course, monitoring is one word where there cannot be two meaning. How are you how are you supervising and bringing the team to cohesion and delivery of the audit requirements or the engagement requirements? This is it. The above sequence has been premised on the basis of SQC1 being applicable to the firm. This is one caveat which I have brought in here because SQC1 is not applicable to every firm of practicing accountants. It applies to specific firms, and in that context, the five elements mentioned here apply to those firms to whom SQC1 is applicable. Then comes SQC1 versus SA 220, where exactly the difference lies, what exactly is the scope, coverage, etc. Scope, as I already said, firm-wide scope, it is engagement specific. Responsibility, the firm is responsible, not only the engagement partner, but also all other partners, all other leaders in the firm is responsible for the wholesome delivery of SQC1. SA 220, the engagement partner alone is responsible for delivery of the outcome in the engagement. Nature of work, systematic quality control framework. I don't want to expand it into many words. Systematic quality control framework. All the four words prescribe abundantly what exactly is required in this context. Then procedural quality execution as prescribed in SA 220 and as prescribed by the regulators and the lawmaking entities, and also by the firm by its own guidance on independence and engagement. Lastly, what is the focus? Focus of SQC1 is on design and implementation of quality control process in the firm itself, not only in the engagement. So SQC1 will pervade into the firm's quality process, whereas SA 220 application of quality control on the specific engagement. So this is. Then we have international standard on auditing 220 versus SA 220, where exactly the ISA 220 has got more in its coverage, ambit, etc. ISA 220 was recently, sorry, not recently, was revised in 2020 December by International IAASB. Key comparatives are: one, more emphasis on scalability and adaptability. That means compared to SA 220, it has got more emphasis. There are more sections, more clauses which deal with scalability and adaptability. Then explicit definition of the quality objectives. Whether when we have only specific clauses in SA 220 stating what exactly quality in audit means, quality for conduct of in the context of financial statements mean, here it provides a lot of other definitions which are very explicit, specific, and directly relating to the specific conduct of engagement. It could be audit, it could be assurance service, it could be any other type of audit or assurance engagement, interim audit or interim engagement. Greater emphasis on the firm's risk assessment process. As I said, SQC1 in our context looks at the firm's quality control, whereas ISA 220 looks at the firm's risk assessment process. That is to say, risk is part of the SA itself. Greater clarity on EQCR. Here I have a small difference of opinion also. Our own EQCR is also as good as ISA 20, but the learned people think that EQCR in ISA 220 is better and has got more ambit. ISA 220 focuses on modern quality management. This is a relative term. Given that in the context of SA 220, it is introduced by ICAI only for Indian companies based on IASB guidelines. We have taken IASB guidelines, but it is prescribed by our institute for our country, for our firm of chartered accountants. Aligns with Indian regulatory framework. That is very important. Then broad guidelines. Audit, I think I have already touched about it. I don't want to go through once again all that. Comply with all quality control procedures, quality documentation, professional skepticism, that I will come to now, and follow ethical standards, due diligence. I will deal only on two things: professional skepticism and due diligence. Professional skepticism, meaning thereby, it is to say that there is an element of pessimism attached in every audit. That is to say, I take due care. I think that something may go wrong, and therefore I take due care. I think that something may go wrong because the law has provided little ambiguously. Therefore, I will take a correct view which is better for the stakeholders as well as for me. Therefore, skepticism really would like to underline a pessimistic approach towards audit in order to protect the firm from the point of view of wider risk in case of non-compliance. So professional skepticism is very important in the context of SA 220. We need to practice professional skepticism. We need to ensure that we have to take a protective approach while conducting the audit. We cannot give in to the explanations of the client in the way he thinks about a legal issue or a business issue. We have to take it in the context of what the law prescribes or what the institute standards or broader guidelines of auditing standards prescribe. That is professional skepticism. Due diligence in the review of audit material, very important. What is the due diligence we need to do while we are doing that every time? So we need to here ensure that all the audit material that are taken by us are relevant for the audit, are concerned with that audit, concerned to the period for which we are auditing, and that they refer only to the context of the engagement we have taken. So this due diligence must be applied by the auditor for every audit material that he receives from the client. It cannot be a long exercise, it has to be a short and quick exercise, but the team which is engaged here must have that due diligence skill in order to ensure whether an audit material is good or bad for purpose of audit. And this is the engagement process performance stages, direction and supervision. This is clearly the role of the engagement partner. Engagement, direction, supervision, performance. There are umpteen number of other sub element of care that is to be taken up. Review, periodical review, policy related review, etc. Consultation, engagement of the engagement leader with the partner, and then with the subject matter expert wherever it is required. Then quality control review. ECQR must be approached, as I said earlier, periodically, and towards the end of the audit, the entire audit material, the entire audit reports and everything must be given to the EQCR, so that they do an independent check of the quality and provide a mandate whether the audit has been conducted right or not, whether the engagement partner can sign the audit report or not. Then difference of opinion, if they are there, document it, resolve it. If there is a dispute, take the view that is good for the stakeholder as well as for the profession. Then comes documentation. No documentation, no audit. It is the golden mantra. 50% of audit failures that occur are always due to lack of documentation or lack of inadequate documentation. There are documentation at two levels, one at the individual engagement team level and at the overall partner engagement partner level, overall firm level. Engagement partner also is included in that. Documentation by engagement team, I already said about it, what they should do, how they should gather the information, material, etc. What type of due diligence they have to take care, everything I already said. Then documentation by EQC reviewer, they have to go through every element of the audit material, audit information and reports that are generated by the discussion notes, the final disposal notes, everything will need to be gone through by the EQCR and provide a report whether the audit has been conducted in accordance with the SA 220 and other prescribed guidelines, and that the engagement partner is empowered to sign the audit report. Then documentation by and at firm level, I already said this conforms to SQC1 related requirements. When the ECQR is mandated to perform a quality review of the engagement, the firm level should ensure how it is to be conducted at the global and at the top level. Here, the help of ISA 220 is also to be taken. There is one more standard called International Standard on Quality Management 1 and 2. In ISQM 2 applies here. ISQM 2 prescribes an elaborate guidance for the purpose of how a firm level documentation needs to be done. So the help of ISQM is very important in the context of documentation by and at firm level. Then my final thoughts, gainsay in the sense this will stay for long. NFRA is here to stay. There is no doubt about it. QRB, the Institute's Quality Review Board and Peer Review Board are also going to be there, and they will invariably follow the dictates of NFRA process and will not deviate. AQMM, Audit Quality Maturity Model. which has been framed and prescribed by the institute, will become the benchmark for assessment of auditors and firm of auditors. So these three are given, these three are here to stay. So what should the auditors do? A, B, C, D. Audit process in letter and spirit. SA 220, follow it to the letter and spirit, no doubt. Build audit files, complete, comprehensive, and convincing. Convincing to the EQCR, convincing to the peer review when it comes, quality review when it comes. So these are all important for the auditor and the firm of auditors to ensure build audit files. Then communication, whatever communication, internal, external, with the client, etc. Communication, correspondence, commentaries. All these three C's will have to be preserved, maintained, and given to the concerned people at the given time. Then last, documentation. All these documentation, documentation, documentation. No doubt about it. Please ensure that you follow the documentation as into SA 230 without any breach. Then comes case studies. We have two important case studies from India itself. Satyam, which is prior to the 2013 company law era, or we can simply say the 2013 company law came up only because of the Satyam episode. Everybody knows about it. I don't want to mince words on that. Then ILFS in India, which also mandated our own institute to make certain amount of improvement and improvisations in the audit guidances. Then we have two from outside of India, Enron, which is the mother of all corporate frauds, and lastly, Wirecard of Germany, which is a financial firm, financial institution, and a bank type of institution. How the failure of auditors impacted this company? Let's see that. Satyam Computer, I have only listed only three major failings by each auditor. I do not want to take it through because all are history. Everything is available in all the search engines. One, as far as Satyam, failure to report fraudulent financial reporting, including the ghost payroll which was running, which the auditor must have been aware of because of the fact that that payroll never had any type of employee confirmations. Then lack of professional skepticism. As I said, pessimistic approach by the auditor was not adopted at all. He never questioned the wrong thing. For example, FDs, fixed deposit receipts, which sometime undated, sometime dated after the holding period, and the revenue recognition principles were given a go by. Then inadequate scrutiny on related party transactions, accepting everything at face value. These are the three, according to me, major issues in audit quality as far as Satyam is concerned. Then ILFS, failure to verify investments in books. 12,320 crores stated as investments. They relied on management information, no verification of the investment document, no verification of a circularization to the investor companies. Nothing was done. And then failure to detect fictitious related party transactions. Actually, related party transactions figure in almost all these four cases, but predominantly in ILFS. Non-compliance with most of the audit standards and EQCR principles. When we come to Enron, as I said, is the mother of all corporate frauds. Lack of auditor independence. The auditor pending had direct access to the corporate management. Failure to detect fraudulent accounting practices, GAP, generally accepted accounting principles. And then AI's biggest crime was destruction of audit papers when it was called for by the Justice Department. This is the biggest crime. So a criminal act was also fastened on the auditors. Wirecard, unqualified reports by the audit firm despite repeated failures and losses. Wirecard was continuously for 3 to 4 years going through a barrage of bumpers and bouncers of losses. But despite that, the audit firm did not question about it, did not question why the losses. Delayed discovery of missing amount of euro 1.9 billion in escrow accounts much after it was pointed out by the public media. Then glaring EQCR failure. These are the audit failures. And then value proposition enhance. If I adopt SQC1 and SA220, what will I as the firm of audit or as auditor will gain? It will ensure to enhance my credibility. It will support my firm's reputation. Very important. I am very clear. I follow my alma mater's principles of guidance, and to the letter and spirit, I will not deviate. Minimize the risk of audit deficiencies. Then adherence to ethical compliance, very important. Our institute places the highest importance to ethics. So adherence to ethical compliance is there in SA 220. Then reduces audit risk during the course of audit, builds stakeholder trust. So these are the major value proposition. And adherence to 220, what are the key takeaways? SQC1 minimizes risk. ISA 220 provides the firm with global recognition. SA 220 ensures audit quality at engagement level. SQC1, sorry, I have left out C in both the places. Ensures and supports audit quality at firm level. So these are all the key takeaways. To conclude, my good friend Mr. P.R. Ramesh once, in a particular context of SA 20, SA 220 and other audit standards, made a very pertinent remark about SA 220. SA 220 focuses on the quality control procedures for an audit of financial statements, outlining the specific responsibilities of the engagement partner, where applicable the engagement quality control reviewer, namely the EQCR, in maintaining the quality of the audit. This standard is closely linked with SQC1, which addresses the firm's overall system of quality control. I liked this particular stanza from the speech of Mr. P.R. Ramesh, and therefore I have quoted it here. Lastly, to end, audit quality is not a jargon. It is the nerve center of the audit firm's credibility and social recognition. With this, I conclude my presentation and outline of what SA 220 is all about in the context of SQC1 and ISA 220 and other various prescriptions by the regulators. I now open the forum for public discussion. Hello?
Hello. Yes,
Yeah.
sir.
Can we now go to the discussions?
Uh, yes, sir.
Is there anything that questions are there?
Yes, sir. Some questions we have received.
Should we go through, or should I, if you can send across, I will reply them by mail to the institute.
No, sir. I will read the questions that we have received from members, and also put this question in chat box for your reference. So there's no lots of questions. There's only 2 questions. So.
Yeah, I'm ready to answer.
Okay. So the first question, that in case of divergence in opinion between EQCR and engagement partner, then how do you resolve, since in case of questions fact, EQCR has no hand-on experience with the client record?
The point here is we cannot conclude so easily that EQCR has no hands-on experience with the client's records. EQCR is expected to go through all the audit material, all the notes, discussions during the course of audit to familiarize himself with the stakeholders, business stakeholders, context, etc. And therefore, EQCR's opinion will be based on a very deep and divergent understanding and research of the audit papers, etc. And it cannot be like a one off or something like on the top of the iceberg type of action. My feeling here is, or my response here is, the engagement partner must be in a position to convince the EQCR in case there is a difference of opinion between the two. The other way of looking at it is, in such circumstances, engagement of a subject matter expert by the firm to take a different opinion also is not ruled out. In some of the cases where I have engaged, I have been with the company I was employed, we have faced this, and we have also uh, given this type of understanding and opinion, or fear to the auditors, as well as, that is the engagement team, as well as to the EQCR, whenever they approached us. And any more broad guidance or broad materials for the purpose of EQCR to understand about the company was also provided by us. Therefore, we cannot conclude offhand that EQCR does not have an understanding of the target firm. It is a duty of the engagement partner as well as to provide all the records. So my feel is that the decision of the EQCR will be final, just like the third referee in cricket.
So this question is also related to the divergence in opinion, where a senior manager disagree with the engagement partner's conclusion on a material accounting estimates, and the disagreement is unresolved but also undocumented. So in this case, what should be done?
Very Our SA 220 as well as SA 230 gives guidance in respect of undocumented information from the client side. Undocumented information from the client side cannot be relied upon by the audit team or the audit senior or leader. Very important. The audit leader, needs to undertake a voyage of the other connected records relating to undocumented estimate. For example, if it is relating to a contract where the work has been performed and the company estimates it at X lakhs of rupees, but it has only set an amount of corresponding stake, corresponding evidence, but not the direct evidence to give a documentation for this. If that is the case, the engagement partner will need to work with the client company, get all the connected record, and clear the breach or clear the misunderstanding about the undocumented estimate, and make the company work on is documenting the estimate so that accounting recognition of the estimate can be given. Very important. Without documentation, no estimate can be recognized in books. This is a very clear principle even in our own accounting standards. Therefore, going against the accounting standard cannot be engaged either by the audit leader or by the engaging partner.
Okay, sir. And sir, this is the last question: whether SQC1 and SA 220 shall apply to all certification assignment?
See, certification assignments undertaken by the auditor in the nature of assurance services, yes, it applies. We have a very clear embargo on statutory auditor accepting non-assurance, non-audit services. If certification work is nothing to do with assurance or audit, the firm of auditors cannot take it up. This is very clear. If it is related to, if this certification is related to audit engagement or assurance service or in the nature of assurance service, yes, both will apply.
Okay, sir, this was the last question. That was the last question. And thank you, sir, for such an informative session. And sir, we are happy to see that over 1100 participants joined us today.
Oh, thank you. That's a good number.
Yeah.
I'm really happy.
Yes, sir. Yes, sir. Thank you to you, sir, and thank you to all participants, sir, for
Thank
participants
you.
for joining in today's session, sir.
Thank you very much.
Thank
Thank
you,
you
sir.
to the chairperson for having the confidence in me. Thank you, Mega ji, for having reposed the same confidence in me. I think I have done a good job, probably a reasonably
Yes,
good
sir.
job. Thank you very much.
Thank you, sir.
Bye. Can I leave or should I come through?
Yes, sir. Can you leave? You can leave, sir. You can leave.
Thank you. Thank you.
Hello. Hello. Technical. Hey, yes, yes. We can.